Hello, hello. Good morning, traders. Welcome to Thursday, the one day before last day of the month, the quarter, fiscal year end in Japan. Good morning, Stelios.
Good morning, everybody. Good to hear you, Cayman. How you doing?
Yeah, good. Yourself?
I am very well, actually.
Yeah,
All good.
I was going to say, here's your daily weather report, but looking outside, here in the UK, being the, what is it, 8th or 9th day of spring, it feels more like autumn than autumn just started than spring, really. So we're going to shut up about the weather. Right, let's dig into some headlines. Let's keep the same format as when our good friend Ryan is on here. He's unfortunately unable to join. No, he's on holiday for the next 2 weeks, and I don't blame him. What's in the overnight news? Well, let's first of all start with what Powell apparently said in a private meeting with U.S. lawmakers yesterday. He was hinting at one more hike to come. That's what one of the lawmakers coming out of the meeting made of it, and had the splendid idea of talking about it with what was it, Bloomberg again. Straight away, first question: what do you think about that, Stelios?
About the 25, one more 25.
Yeah, one more hike, and then.
Yeah, well, that's what the dot plot is showing, roughly.
Yeah.
That's what the markets are expecting, maybe a little less than one. And, the Fed never really wants to surprise. Is there a reason why he would say, oh, we're going to do 2, 3, 4 more and then see what happens? No, they've already told us we're going now meeting by meeting. They dropped from the previous minutes from the text. They dropped the ongoing part. So, we are well and truly in end of cycle mode.
Yeah.
Is it going to be one hike? Probably. Is it going to be no more hikes? That's another possibility. So I don't see any surprise in what Powell said yesterday,
Yeah.
and it's in line with the dot plot anyway.
Yeah, exactly. Yeah, the mid rate around 510, 512. The final rate is about what we've been expecting as well on here for a while now, that we're at the end of the cycle. It did not affect the market much when it came out. We'll talk about price action that we are seeing a little bit later. First, let's move on to a couple of other headlines. The RBA apparently had made a review. I think there was like 1,100 participants or so, and they've come up with a few recommendations, saying that they should have fewer meetings, is the first one. But then the interesting one is that the panel, or those who did the review, what is this? Okay. Who did the review says that rates should be set by a committee of economic specialists rather than the board.
At the moment.
Hold on one second. I'm going to kill my squawk for a minute.
Kill your what?
Yeah. So that's a very interesting recommendation that they made there. The first thing that sprung to my mind, and I think both you and I know exactly what happened there, is that if you have the rates set by a committee of economic specialists, I wonder who will be that committee, because if it's again, if some of those participating in the committee are economists from banks, I can see similarities with what happened over the LIBOR scandal some 10 years ago, 10, 12 years ago.
Yeah.
I mean, I'm not sure that's a recommendation that RBA should really follow through with. Whether they make mistakes, and central banks always make mistakes, whether they make mistakes or not, I'm not sure that rates should be set by an external committee of even specialists,
Yeah, it's easy to get a conflict of interest, and yeah,
Too easy, right?
I'll leave it at that. Yeah.
Yeah, exactly. Okay. In other news, we've had the I'm going to look at that while looking at the prices later as well. We had Canada's Freeland budget coming out, and she goes green, of course, with a lot of spending. Where specialists were rather expecting them to be a little bit more on the fiscal restraint side, but there seems to be a clear move there towards what the US is and Biden is trying to do as well, is to spend a lot on green. But actually, the Canadian dollar there has not reacted at all. If anything, it's even strengthened on it. So even if she disappointed the market somewhere with more planned spending, Canadian dollar didn't react to it. So we're going to have a look at the Canadian dollar a little bit later. Other news. I've read an article about, and that's back to Australia, about the Australian bonds not being inverted. So it does seem that the market is having a little bit more confidence in the RBA to tackle, well, simultaneously inflation and not sending the economy in a downwards spin. Again, it doesn't really reflect in the FX rate, but we know we are in this period, end of month, end of quarter, and things could have a slightly different look coming next week. So, but it was interesting that this article came out, and because I haven't really looked at what the curve was doing in the Australian bonds, but it is true that. If it's not inverted, it does show a little bit more confidence in what are in the fine line that the RBA is walking. So I thought it a bit interesting. Maybe this thing is going to show the Aussie with a little bit of strength coming into the new quarter, but we'll have to see, because there's a lot happening on the Chinese side of things, and we know that the Aussie is also very much looking to China for what the strength or the weakness of the Australian dollar is, because it's a huge partner of Australia. And that brings us to China then. And
Cayman, sorry to
yeah.
interrupt. Just one
Yeah.
note about the Australian yield curve. You're absolutely right. It's not inverted. It's slightly upward sloping, so that the 2-year is at 3% or something like that, and then the 10-year is at 3.30 or whatever. The thing to note is that the rates are a lot lower in absolute terms.
Yeah.
And that's why it's more difficult to have an inverted curve. You know, if you've hiked massively, and the 10 years gone from and the Fed fund rates has gone from 0 to 5%, then it's easier for the market to start pricing cuts, more cuts than having the curve starting at 3% instead of 5%. Yeah. But anyway, just a note. But it is actually surprising. I didn't realize that the Australian yield curve was not inverted. I would have bet that it was inverted. So there you go.
Yeah, that's why I'm actually bringing it up, because it's interesting. If you look at their inflation rate, which has jumped again the last time, right? I know it came after a little bit last time, but it's still at the lofty. Where was it?
It was yesterday. Was it yesterday? No, the day before.
Yesterday were the retail sales, I think. Was it end of last week or so?
I seem to recall it was this week. Anyway, let me check. Hold on, this week.
Yeah, but I am on the data and I don't see it.
You're right.
My screen, by the way.
Oh, there you go. Australia CPI. It was late yesterday. 6.8% coming down from 7.4. Yeah. Coming down from 7.4. It's on Wednesday. If you go to Wednesday, it's going to show up first entry.
Yeah, but why don't I see the whole week here?
Go on, keep going. Keep going.
No, I'm already Tuesday.
There you go, CPI.
Yeah, there we go. Yeah, it's coming off, but then we are at actually same or higher levels than in the US, and it's true that and that should somewhere play on the yield curve somewhere. or somewhat because of the expectation for what's going to happen afterwards. But yeah, I mean, I think it was just worth noting what
Yes,
this article. Okay, then over to China, and that's not really positive what's coming out over there, right? First of all, there were these lots of comments about the Taiwanese president planned visit to the US, that it was increasing tensions, that Taiwan wants to get a tax deal with the US, increasing the tensions. And then they came out with the Chinese Ministry of Defense came out with those lines earlier this morning saying that the PLA is willing to strengthen the strategic communication and coordination with the Russian military. And they also added that, well, there was, where is it? Yeah, there were some more lines, and then a bit later, and actually not long ago, EU's von der Leyen came up saying that it's clear that the China's CCP want to make a systemic change to the world order with them themselves being the center. At the same time, she said that the relationship with China is very important. So I think she's starting to panic a little bit. Our von der Leyen lady on what's happening in China, but clearly all the Chinese lines overnight were not very cooperative to any peace, and they said they want to restore the peace and they want to keep the peace, but the lines they're saying are clearly still divisive between them and the West, and especially aimed at the US, of course, but it's not very positive, is it still?
No, and there were these all these comments that came out of the Chinese Defense Ministry, right? You know, they're working together with Russian militaries to strengthen communication coordination, deepen military mutual trust. I mean, this is all dichotomizing the world, basically, right? It's going to be China, Russia against everybody else, and it's scary. It really is scary. So, you know, the Chinese could have been a lot more neutral, but obviously they're not, because they're looking after their own interests. And we know the Chinese have decade and multi-decade and, you know, century-long goals, which they eventually succeed in hitting. So it is a little bit worrying, I have to say, but that's the world we live in at the moment. And one more thing I wanted to say about China, while we're on that subject, just a comment that their premier Li Xiang, I don't know how, I can't pronounce the name, said that they're going to be delivering reforms and they're going to be opening up their economy. They want to stimulate growth. All very, very bullish comments. Then again, it's something that a person in that position would say. But you know, the Chinese, they want to expand. They want to, become the driving force of the world, basically. And this is what they keep telling us. So this is a pretty bullish headlines. But then on the other hand, the other stuff about the military operations and the defense ministry quotes not bullish at all. So a bit for everybody.
Yeah, just to clarify for our audience, we are not doing any political debate here, but we are just everything that we talk about has a potential impact on markets. So that's why we have to mention those kind of headlines, because they can make markets move, and it can exactly start to create some tectonic shifts in markets if some of these headlines would materialize. So that, just to clarify, we are a non-political driven or even opinionated organization. We adjust some stuff catches our attention and can get us worried, or on the other side optimistic. And then the last thing I read, and that's really it's opinion, but also driven by some comments in the market, and that it seems that after the Kuroda and Uchida comments yesterday, the market is now really starting to prepare the succession for when Ueda will take over, and the market is really starting to think about what a shift in monetary policy can mean in Japan. It's all going to start. The official handover is on the 8th or 9th of April, and the first meeting is end of April of the Bank of Japan. So just to prepare everybody, they expect some moves to start happening in the yen. We are in end of fiscal year over there. So the flows we are seeing right now will be the moves we are seeing right now are totally flow driven. They have very little to do with fundamentals right now, and we are seeing some yen selling, but beware for the start of April. The market could there could be two things happening actually, and I'm just going to say it quickly now. So usually at the start of a fiscal year in Japan, there's new money flowing into the system, and they should be investing. The issue is now that if the market and the trust banks and the insurers expect the YCC to be changed, or at least the monetary policy framework to be somewhat changed, they might hold back on those new investments. And at the same time, the rest of the market, non-Japanese, will probably start to bet again. Similar thing as we have seen somewhere half February or so, and start to send the JGB yields back up and starting to prepare for a possible change in the Bank of Japan. So regardless what happens in the end of at the end of April, whether it's a standstill and then the market will probably react violently to the other side, or some changes starting to appear. Be careful what's going to happen in the start of April, because the market will start to prepare for the handover in Japan. And that is about what I had myself for headlines. Have you seen anything else?
No, I think we covered it. I mean, we can go over the economic data that.
Yeah. All righty.
But
Okay.
no, I think headline-wise we're done.
Yeah, the data then. We were talking about these home market, and then we're really getting some contradictory data. Yesterday, the pending home sales were a little bit better than we're actually not a little bit. They were like pretty well better than they were expecting a negative number, and it came out a positive number. It is a jumpy number, but still the fact it's positive versus a negative expected after the 8.1 of the prior month is just telling us that the market is not yet collapsing, is it? It's one of the big dominoes that we are looking at for when it could potentially fall. There's a lot going on about the commercial real estate as well in the market right now. That could be the next big worry over especially in the States. It's a big worry, but I think whatever happens in the US could be happening a little faster over there, because the US economy is a dynamic economy. But it's really everywhere the same, right? We've had this pandemic. We've had changes in work situations. People are working from home. And I think it may happen in the States first, but then it's really going to weigh on the whole world. But keep this in mind. The market is really nervous about what's going to happen in the real estate, and especially the commercial real estate market next. Then we had the oil inventories, and in line with what happened on the API the day before, we saw quite a big draw. When that came out, that's about where we did the high on oil yesterday. WTI went into the 74s, but it's a pretty decent level up there, and we're going to have a look at what's happening in that a little after we've done this data. But we're getting into interesting levels on the oil, so we'll have a look at that later. the rest. What else have we got?
Well, the big one is Spanish CPI.
Yeah, then into today's numbers, we've had a bit of Kiwi confidence numbers not being very nice right now. I'm just having a quick look at Aussie Kiwi. Yeah, Aussie Kiwi is a little higher again. And then we are going into the European CPIs, right? So what we are seeing in the European, the German states, sorry, is the year-on-year number is starting to come off, right? We're seeing North Rhine-Westphalia first of all. We're seeing the Bavaria number 1.6 lower. We're seeing Baden-Württemberg a percent lower. Hesse is a percent lower. That they are coming off, right? And then adding to that, we've had the Spanish CPI data also starting to fall, and the Spanish CPI here, the HICP, fell a whopping 3% year on year. It's a big drop. It's an absolutely big drop. It hasn't had any impact on the euro right now, because I think we're in this end of month, end of quarter. But really keep an eye on what's happening to the euro once we've turned the month, I would say, or even into tomorrow, perhaps.
Yeah,
it could have an impact. Yes, Stelios.
Can I just say one thing regarding the year-on-year inflation numbers? So we've been talking about this for a while.
Yeah.
Always when you have year-on-year numbers, so when you're comparing with a year ago where inflation was rising at a very fast pace, it's almost unavoidable, obviously, unless things continue to get worse and worse, which they're not. It's unavoidable that mathematically this number, the year-on-year number, should be dropping. I think we have a double whammy now because oil prices have dropped from the highs, and gas prices, more importantly, have dropped massively. I mean, if you look at the natural gas chart, we're back to pre-2020 levels, which is crazy. Yeah. So the energy cost dropping so quickly is a double whammy, and it's showing in the cost of goods, because let's face it, energy is required for everything to be produced, all goods and services. So I mean, the natural gas chart is incredible. Right. The only problem is, how do you trade this? How do you go long this? Because you have huge contango in the futures curve. Yeah. Anyway,
so this is what Stelios was hinting at, this natural gas. This is 2019 levels, and we had, of course, the pandemic drop, and then we started to really absolutely rocket, and now we are back to those levels, and we are seeing the same in oil. We are seeing the same in oil. If you look at that, 2019, well, okay, we're a little bit higher, but if you look at 2018 levels, 72, 63, 61, and our low that we printed earlier this month is back into this zone, right? So we've jumped now a little bit again because of Iraq or so, and the OPEC starting to cry mummy. We're jumping again, and perhaps the market still a deep buyer because of possibilities for China reopening and things. But we are back at let's call it equilibrium levels. Stelios, can we?
Oh yeah, I mean there are two forces. One is the supply chain, right? Still being, I don't want to say broken, but the oil market is pretty tight. So that's keeping the price elevated, but there is also less demand because economies are turning lower across the globe. So, it seems to be a level of equilibrium, like you said. So oil around between, 65 and 85. I know it's a big range, but I think that's probably the range for now. And oil can be a widow maker. I mean, it can move.
Yeah, I said a week or so ago, and when oil came into that zone, I said, to me, the 62, 67 is a little bit of a crossroads neutral zone between what we have seen 2020 periods of economic downturns where it trades materially lower, and then what we have seen after the pandemic, those levels shooting up, and then it looks as a bit of a crossroad, this 62, 67 ish. It's tough to stick it down to $1, but 62, 67 ish zone in WTI looks a little bit like a neutral or a crossroad zone to me. Okay, what's to expect for the rest of the day? We are seeing this. The BOE's inflation letter is to hit the market a little bit later, and I think that is around 1 p.m. Simon mentioned that in the room as well. Then we have the German overall CPI coming out. Shouldn't be a surprise because we already had the German states reporting their individual numbers, so we should see a year-on-year drop there. Then we have the claims in the States, and I think it's finally the final.
The final number.
I hope, yeah, it's the final one. Yeah, hooray! We are nearly second quarter, and we are finally getting the final GDP readings in the US. Unless there's anything world shocking in the revisions coming out, their late revisions, this should actually not really have too much of an impact. I think on the data wise, if I'm not mistaken, it's going to be tomorrow that we're going to have a few interesting numbers, but we'll cover that there and then. And I think that is us done for the roundup. I know, Stel, you are going to show a few
Yeah,
things.
I can show stuff today.
Shall
No
I
problem.
just go over the majors quickly, and then
Yeah. Go for it.
come to you. I'm just going to take a couple of minutes to share what's going on in the majors. There we go. First of all, euro dollar. Again, we are end of month, end of quarter. Yes, the euro is recovering. Yes, it's partially due to less stress in the banking sector. The markets are recovering. You only have to look at what's happening in the S&P or the bourses to the other equity markets to know what's going on. Fact is, if you want to trade it technically, it held this little support line this morning. So 108.20 is going to be your first support, and now we are through, or we tried at least to get through those prior highs. Listen, I'm not going to take a direction here and now, but I hear a lot of voices saying that this is actually already a move that should take it back up to 110. I want to see it break through 109.15.30 before I'm really going to go all guns blazing is a big word, to try to accompany. I'm really going to try to be patient, because I think there may be one last surprise tomorrow, and I'll talk about that tomorrow perhaps in this one on the euro side before the quarter is done. But in the meantime, this is it, 108.20. Well, 108.70, 75, 108.85, and then we're talking about this 109.15.30 that we should keep an eye on, I reckon, for any further developments in today's market. On the cable then, bit of a similar situation. We've tried to tackle, or we went back to the prior high that we had here yesterday, and we're shying away from it. Yeah, pretty logic, I'd say. There's not too many fundamental reasons for it to go higher, but it's all going to be driven by end of month flows. We will have the BOE report out later, so keep an eye on it. Personally, I'm relatively positive in cable right now until the end of the month or so, for as long as we hold 122.60.70. But we have already a little bit of intermediate levels around 123.10. the night's low around 122.90, 122.85, 88 there as well. There's a few short-term levels in there which should or could support this. I wouldn't be surprised if this pushes for the end of the month, if this pushes back into this 124 zone. I'm just saying I wouldn't be surprised. Yeah, I'm going to talk about gold as well, or we will talk about gold, and I think Stelios may have a look at that. So that's for the cable. Then I'm going to take Ali's question. Take a look at the euro sterling. I mean, whether it's hourly, 4 hourly, whatever, this euro sterling is 88, 10, 15, 20, down to 87, 80, 75, and there's a magnet at 88 right now, which could be there until tomorrow evening or later today. That's very possible. I think at the end of for tomorrow, so we may have a little bit of more gravity in there. But if it goes back above 88.20 and you confirm above 88.25, then we're probably going to be in for a retest of the top end of the channel. So if ever we go below 88.75, 80, there's some levels below there as well, you know, 88.5, and then those prior lows. But it looks to, it's very, very, very neutral right now. But it's really end of month, end of quarter flows really that are going on in there. I'm gonna have a quick one on, and I wanted to mention the rand as well today, because we are again in this 18 support zone. It's been coming off slowly from the start of the week. It's been coming off gradually. And you see here this Monday, we were at 1835. It's, in my opinion, also end of month, end of quarter flows. And I would not be surprised that before this month is over, we are going to see a bit of a break. I'm not going to call it a break, but it might be more having the looks of a stop run than a real break before this month is over. But reconsidering it then, once the month is over, let's see where it goes to. If my hunch is right, there's going to be some support around 1785. I think on the, is there something on? Yeah, you see the 100-day moving average comes in around that same level. But to me, there's going to be a very, very interesting zone if we get back down here to 1770s. And I think if ever I see it back down there, 60, 70, my butcher's glove is going to come out of my drawer, and I'm going to try to catch a knife, I think. Similar is happening on the dollar mix. It's just slowly leaking lower. And I don't know what's going to happen before this month is over, but I wouldn't be surprised to see it somewhere strand in the lows here, because there's very little rebound that we can stick our teeth in right now. Of course, everything needs to be taken under conditional form, because we never know if there's anything about risk coming out or so. Let me have a quick look through what's happening there. Yep, euro sterling done, cable done. Gold, yeah, I think Ali, Stel is going to, Stel, take it away, man.
Yeah.
I think it's your time. I'm stopping the share. Go ahead.
Cool. I will share. I'll take a look at metals, obviously. I always start with yields, and we are firmly sideways in the 10-year US. In most major government bonds, actually, we are going sideways. We have bounced back very nice technically from this zone that we identified as we were coming down. We did say that this zone should be a pretty strong support but now we're kind of stuck between the 50 and the 200 DMA, a couple of fibs as well. It's kind of starting to coil. There's going to be big decision that yields are going to have to take. Are things going down the toilet or not? That's the main question. If yes, then I think you're going to see yields break below, and then next realistic support is somewhere around 250, 275, that area. But for now, with the banking crisis in the rearview mirror and nobody really talking about it for the last couple of days, also in the absence of any really terrible data out there, yields should theoretically continue to creep higher towards 365 and above. I don't know, but we are kind of range trading now in yields with a potential to grind a little bit higher. So with yields, sorry, were you going to say something?
Yeah, I was just going to ask you.
Yes.
Assuming that everything holds up, and next week we will have that very strange NFP coming out on a day where most of the world is trying to hide the Easter eggs for the kids. What's your break level? And I'm going to go the other way around. What's your break level topside? You say like, oh, wow, if it goes through here, then the world is a much better place, or the US at least is a much better place, and that is going to have an impact on the dollar, and we know that there are some really interesting levels on the top side there as well.
I think we need to break above 370.
Okay.
Above, which is not too far, right? It's 13 basis points away. Above 370, then there's clear air towards 4% again. But I think for now, this kind of 340 to 370 is the range. But yeah, 370 is what I have marked in my notes for the 10-year US. So with yields being more or less flat, what's happening with the rest of the major asset classes? So equities, we have been talking about this for a while, for the last few days. I still think we grind higher going into quarter end tomorrow. I didn't expect to see daily, just green candles one after the other, but this is what we're getting. Okay, there's a tiny red one here, daily candle, but it's almost 5 or 6 straight green arrows now, green candles. So in the absence of bad data and bad news, I think the path of least resistance is still to the upside. I don't say it's making a lot of sense. I think markets are still overvalued given the general environment, but we have to trade this market. And in the short term, I think going into tomorrow, we're going to be heading higher. Now we are, we do have this high here, which is what, for 40.80. So that's a level to watch. As we've said so many times, when you get to month end, especially quarter end and year end, don't try to make too much sense of moves and levels and fibs and technicals. It's sometimes just the flows themselves become more powerful than anything else, and they just have to trade where they trade. So, if you try to look at levels, I would just say forget about it. Any technical levels you have, I don't think they're as relevant as they would have been on any other day of the year, apart from today being the day before last of the quarter. So I think, go on.
And especially the short-term levels, right? And that's already partially answering what Ali was talking about in gold there. Yes. Gold is making some support at 1964. I think Stelios will look at the metals, but
yeah,
$2 or $3 in gold at the end of the quarter. Really, I hope for you it's holding if you're long, but it's you're really trading this short-term. It is bid, and it's bid over the past couple of days, but I'm going to steer away from making predictions in a $4, $5, $7 range in gold going into an end of a quarter.
Yeah, I mean, gold is kind of consolidating after a pretty powerful move, but we have to wait and see how the first couple of days of the next month go, because it's obviously the resistance is going to be these previous levels at around 2000. But it's easy to break support here, and we're a lot closer. And if yields do start picking up after this quarter end, then I think the most likely scenario is we break to the downside. Having said that, I am still very bullish metals, and I think we're going to take out the highs, etc., etc. Gold is a lot closer to all-time highs than silver. We're only about $100 away, so I think that's going to get taken out. But first, I think the risk is we see a little correction, so we could easily correct down towards 1900. The 50 DMA is coming up towards that level as well. It depends on a lot of things, but if I was long gold here, I would be a little bit worried, because it looks like it's very close to breaking the support trend line. Silver is doing a lot better. But again, guys, I'm long silver, right? I'm not long full position, but I have just under half the position I want, and I'm up about $2 now on that. Actually, just above $2. So that's doing really well. But if you want to get long silver, I would not get long here. I am keeping my longs because obviously I'm very comfortable with that being 10% in the money. But we are very close to this channel resistance. Now, I might not have drawn it perfectly, of course I haven't, but this is roughly the level, 24 and change, and then 24 and a half to take out these highs. Once, or if or when that happens, I'm adding, but before that, I'm not touching it. I am actually considering, if we do get on this, if we could touch 24, considering just letting go a little bit of my position, maybe the quarter, I don't know. But it's been a really good run. It's a really good run, and I love it when it goes this quickly, this well. And I usually do take profit. So I think I will take some if we try to hit the 24 level. So you were going to say something?
Yeah, no, I was just going to add, we're in the same position. Of course, I've already, but I'm trading in a little bit more, let's say, dynamically because of my spot FX trader rules. But I really like it, and I just same as you. I think if we hit 24, I'm going to take before the end of the month, I'm going to take some off just because of that channel and because of the time. We never know how April will start, right?
Yes.
And if it goes through 24 and a half, we step on the accelerator, and if it comes back down, at least we will have taken some off, and then we can have just a relaxed look at it. And if it comes off, then we can start to make plans for when to add again what we've sold. So I think for the time being, this situation, and I'm looking at it, is trading around 65. 23.65, give us another 30 cents, and maybe happy days before the end of the month. Bank some, keep the account happy, and start April with ammo in the pockets, right?
Exactly, and we've talked about this so many times. In markets like these, you have to be nimble, you have to be taking some profits. And even though I have a very, very bullish medium-term view on silver, and look, we had an impulsive move. Yes, it's a kind of a long correction, but it is a correction in my opinion. And when that breaks, I think 30 is gone pretty quickly. So I am going to definitely take some off. The more we talk about it, Kay, I think as soon as we're done with the flow show, I think I'm going to take half of my position off. You might as well.
You're a trader, mate. You're a trader. It's like in banks when we did our morning meeting and for everybody around the globe. We had when I was in London, we had this morning meeting, and everybody talking, and then of course we were on the spot desk, and then were the option guys talking, the metal guys talking, the bond guys. When they had the time, they came to join us as well, and then you have this kind of plan, and okay, we're doing I'm planning to do this, but I'm not in a hurry. And as soon as the meeting was done, back trade on, because that the meeting was talking about it. It is so funny.
Yeah. Anyway, when I do something, I'm gonna write it on the trades room just to let our clients know. Yeah, so metals looking constructive, but in the short term, I really wouldn't be chasing them long here. There's a time and place for everything. Platinum is similar. Platinum is actually in the middle of the of this corrective channel, so that yeah, nothing to do with that there. I'm just going to leave that alone. Might as well look at cryptos as well. Bitcoin is trying to take out the highs. Almost, well, took it earlier today. I mean, this looks like a good potential breakout as well. Obviously, it's a very big level. It's a fib. It's these lows here from May 2022. It's also these lows roughly from June 21. So it's definitely an area of interest here for Bitcoin. But if this goes, then we're going to be heading towards 34 to 35, I think, pretty quickly. I don't have any positions in these. I find them, I always like to trade things that I understand, and these I just steer clear from. But technically, Bitcoin looks like it's about to break out of pretty good resistance, and that should clear the, pave the way for a run higher. Ethereum is the same, a little bit worse in terms of heading into resistance. It's not, Bitcoin is going to be clearing resistance. Ethereum is heading into it, so I would prefer Bitcoin as a long, even though Ethereum is Bitcoin on drugs. So if Bitcoin goes up 1%, that usually goes up 3%, but today is not the case. And currency-wise, again, not much to do. I still think I was asked on Face yesterday or the day before, what would I do with the euro dollar? I said, look, I think it's going to be squeezing towards 110, at which point we see what happens. But I think the euro dollar is not clear to me in any way. If you want to trade it short term, I still think in the next few days, higher is the way. But I'm really not convinced. The euro pound, on the other hand, again, is kind of trapped in a little range here, 87.2 to pretty much 90 is the range. I want to be selling rallies on this. So especially given the weakening eurozone CPIs, I think the next move on this pair is back down towards that 83, 84. But let's wait and see. Otherwise, nothing. Sorry, go on.
Can you have a look at oil, please, mate?
At oil, yeah.
Yeah, because we have a lot of people also in the room who are interested, and there's some stuff going on in the 74s, if I'm not mistaken, or perhaps a little higher. I don't know. Yeah.
Yes.
Some
well,
70. Wow. Oh yeah, you're a bit wider. It's in the shorter term, I think, where there's some resistance there. But yeah, please have a look at it. Thank you.
Well, there is on the daily. I look at daily charts. Anything less, from my style of trading is too short. But we have the 50 DMA, and this would be a really nice break and retest here. So I think around 75 and a half, 75, 75 and a half. It's a nice level if you want to play it short, and I would. And also it's these lows down here. I mean, technically, it looks like this is a nice little zone that you can play off. I am definitely going to try a small position because this thing can be a real bastard. Pardon my French. Small short at around 75.50 if we get to that point. And because remember, the market has now forgotten about all the troubles of the past couple of weeks. If any bad news resurface, banks or otherwise, this baby is going straight down. So I like this with a relatively tight stop and small size. I like that to the short side, a couple of bucks ahead of above here. That's pretty much it for me. I mean, nothing else that interests me in currencies or anything else. My view, as you all know, doesn't change from one day to the next unless there is some kind of big event. Mm-hmm. So I might bore you sometimes, but this is what I see.
I'm just taking this question, and we can handle it together from Horatio, saying that when you form a bias on a currency pair, which time frame do you use to match your bias with the technicals for optimal entry? Okay, if you have a bias on a currency pair, that means Oh, in theory, you can have a short-term bias, but let's say if you have a bias on a currency, it should, in theory, be a bit longer term than just the intraday, right? Because you can trade intraday around the bias that you have more medium or longer term for a currency. So you always have to, if you want to match it to technicals, you always have to go from the wider to the start with the wider and then drill down to the shorter term frame. But if you have a real bias, then you should clearly identify levels that are stronger than just your usual intraday levels. Me personally, because I'm trading a lot of biases, I'm rarely, and the guys and the girls in the room know that, I'm rarely looking at anything under and that's really rare, under the 1 hour, and most of the time I'm sticking to 4 hours and or wider. Yeah, you always have to go from the wider into the shorter term if you want to look for entries. And I would say, yeah, I mean, that's basically it. And then you put a few fibs on it, perhaps a few trend lines. I'm not a big fan of M&As. Yeah, MAs. Sorry, not M&As. MAs on
M&As, M&Ms.
Yeah, M&As. I'm a big fan of M&As actually because it makes for big moves. But on the MAs, I'm in currency pairs. Anything below the daily is useless to me. So yeah, I mean, you have to do a bit of homework, but always start from the wider and then drill down to the shorter time frame, Horatio. I don't know, Stella, if you have anything else to add to that.
Yeah, I was just going to say, when you say bias, it can be pretty vague. You know, when I have a bias on a currency, it's on a horizon of a multi-month horizon. So I start with the weekly and the daily charts when I form my biases, and then I look at daily, or even perhaps something like a 4 hour for technicals to enter and then to exit. So it all depends on what you mean by bias, because I know people will say, oh, my bias for euro dollar is long for the next 30 minutes, and when I say I want to be a long euro dollar, I mean for the rest of the year. So it depends on that.
Only for the rest of the year. I thought a Greek position is like, I mean, the short-term horizon is 10 years and the long-term is 30.
Well, my silver trades, the last proper one took nearly 2 years.
I really, we've been part of the FA community, ForexAnalytix community now for, what is it, a year and a half or so?
Yeah.
And I remember you saying it from day one. So you have a bias, I can confirm.
Yeah.
But it's good, man. It's really good. Look, we've said everything that we wanted to say. I think let's leave it on your page there to close this Forex Flow show. I hope everybody enjoyed it. Thank you very much, Stelios. Thank you very much for our audience as usual. And we'll talk to you tomorrow. Safe trading.
Thank you, Kay, and thank you everybody for being here. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.